Yo, ladies and gentlemen, here is your Bitcoin update in 10 minutes. Okay, listen, it has been a wild day today for price action. You can see that is evident with Bitcoin trying to get above that 200 EMA. But firstly, let's roll over to today's live, ladies and gentlemen, what we went through in relation to the dominance of the dollar. Check this bad boy out. Or this asset class, or whatever you want to call this, the dominance of the dollar. Good morning, Mike. The dominance of the dollar was profound in last night's trade. You can see that we took that big mad move to the upside, taking out nearly that 1450 zone. And now we've seen a little bit of a recovery. I'm going to tell you now, they leave footprints on the dominance of the dollar. They will come back to this point in the chart. Okay? Now, ladies and gentlemen, given that we addressed the idea that the Mr. Market Maker, or should I say, the dominance of the dollar, with traders transacting continuously on the dollar, why did we have the understanding that price was going to come back up to this point? Check this out. We go into the dominance of the dollar right now. You can see that they came up and they ripped into that vector candle recovery zone right there, ladies and gentlemen. What is it that we need to understand about this? Dollar is king. So for every retrace that happens in the chart, ladies and gentlemen, just understand that they will be coming back up into those previous vector candles. You see, the dominance of the dollar is a perfect example of why you need to be very cautious when you are going to trade against the value of the dollar, because the whole thing right now is all about the dollar. Now, listen, firstly, GBP USD, all right? The pound sterling takes an absolute nosedive today. And we had the Bank of England making a statement on what is looking like to be the biggest rate hike in decades. The pound right now is trading at 1.06 against the dollar. I'm going to tell you this now. Dollar does not like euro. It does not like pound. Any asset against the dollar, dollar just doesn't like it. Okay? When you've got assets like euro and pound appreciating against the value of the dollar, it undermines the dollar, okay? Which is why dollar right now is getting payback, and it has been getting payback for quite some time, given that we have just seen this absolute phenomenal move by the dominance of the dollar. Traders are seeking safety in fiat. Can you believe that? What happened to Bitcoin, the hedge against inflation? What happened to gold, the hedge against inflation? Look at that. Madness, dropping to the downside. Gold is now cheaper, ladies and gentlemen. It's all perspective on how you see it. Oil itself taking an absolute nosedive, which is relating into dollar CAD, making that mad move up. Look at this. 1.38 against the Canadian dollar. That is frightening. The yields themselves, continuous, moving up. We've got the 10-year yields going to 3.92, ladies and gentlemen. Wall Street did say that anything between 3.5 and 4%, there's going to be a big problem. That means we know that NASDAQ's taking that nosedive and working its way towards these lower parts of the chart, ladies and gentlemen, and I am dreading it. I am completely dreading the idea that the NASDAQ itself could maybe make its way towards the blue vector candle down below at the 10,500 mark, ladies and gentlemen. It would only be fitting given the current circumstances that are happening right now economically. We've got the pressure of inflation, and the Fed is trying its hardest to resolve that matter. Okay? So the narrative is safety. That's what traders are seeking. Now, let's go into Bitcoin. How long we got? 4 minutes in, ladies and gentlemen, we are doing great. Red vector candle on the monthly time frame. We are coming up towards the close of a monthly candle. It's the 26th of September right now, and we are coming close towards the end of the monthly close. We've got 4 days left, so it's going to get very volatile, ladies and gentlemen. I will tell you that. If Bitcoin breaks beyond the 17,592, we are yippee-ki-yay to the downside, ladies and gentlemen, and we have got a plethora of news announcements coming out this week, which could trigger that move. In the calendar itself, we have tomorrow, Fed Chair Powell speaking. Let me just bring that up for you right now. Happy days. Fed Chair Powell speaking. And then we've got the consumer confidence. If the consumer confidence comes in more again, and it's above 100, inflation is going to be a problem still. Why? Because people are still spending money. That's the issue. Even though oil's taking a nosedive, that means people are now encouraged to actually spend money because it doesn't cost much on oil now. It doesn't cost much to go out and work. You don't have to pay much for travel. This is great for the transportation companies. Why? Because now it costs them less to do business. But then we've got the flip side to that with the Fed increasing the interest rates. So we've got this increase in interest rates across the board, and it doesn't even look like it's doing anything to assets. Okay, it's not even doing anything to people to make them believe that, right, things are getting kind of difficult. Now it's all psychological, ladies and gentlemen. Now, check this out. We're going to just mark off some zones on Bitcoin. Now, you can see that Bitcoin, again, still struggled to make it above that 200 EMA. And we said it in the live earlier on today. If they can get above the 200 EMA, break and retest it, happy days to the upside. But we didn't see that. What was it that was leading us into the impression that they were going to try and break down? Well, look, the book map itself was giving us a clue that things were likely to start moving lower. Why? Because they had been hitting the liquidations for the shorts. You can see that. Smack, smack, smack. 42K, 63K, 82K, 64K. If we go to today's price action, this is where Bitcoin was during the live stream, where we saw that the delta was rising, but it wasn't following through. And that 19,300 zone could not get taken. It's like there was a wall right there. Okay? They came and tested the VWAP. And in the short video that I did earlier on, where we understand that Mr. Market Maker, institutional traders, they like to build their shorts above key notable areas. Or in this instance, institutional traders like to get sells above the VWAP and they like to get buys below the VWAP. This is why the VWAP is crucially important for institutional traders, because it's the volume weighted average price. And this is where they base their decisions on. Okay? Now, you can see in the book map itself, we have got a lot of commitment down at the lows, ladies and gentlemen, and Bitcoin is slowly trying to make its way back into that VWAP. Remember, the VWAP will be resetting very shortly. It's 20 to 10, and the markets will reset to open for the Sydney session. So spreads will start to widen out. Okay? Now, looking at Bitcoin's liquidation zones themselves, you can see in the actual high block itself, that was updated at 2 o'clock earlier on today. Let me just get this changed up for you. Flip over to Binance. And we have ourselves, here we go, right. So lots of people decided to run for shorts today. We've got these liquidation zones, $690 million worth of long liquidations at 18.75. And we've got this bad boy zone right here, which is collectively around $2.4 billion worth of long liquidations in and around the 18.475 zone. Does that mean Bitcoin is going to go to those zones? That means Bitcoin would have to travel all the way down towards this point. Now, will it happen overnight? Who knows? But let's look at the logic. What's the likelihood of them going to that point? Well, look, there's compression in the moving averages right now, okay? Price is flat. Powell speaking tomorrow. We've got consumer confidence. So Bitcoin could actually end up flatlining over tonight into Asia. Asia might bring us a little bit of a surprise move. We are trading above the psychological high. That means that if they can't follow through with the psychological high, it could be an indication that we're preparing to build shorts. Where do you see them building shorts? Above what? The key 19,000 zone. What do we understand? Remember, Mr. Market Maker likes to build his shorts above key notable areas. This is where he gets his shorts filled at the highest possible point so that he can sell from the highest point with the anticipation of price breaking through that range, and he's getting the best fill possible. Likewise, if we were to take this principle and go below the 19,000, the same thing applies for longs. He's getting longs filled at lower prices because he wants to sell it at a higher point later on. And then we would anticipate the volatile move to break price higher, okay? Now, going into Asia tonight, ladies and gentlemen, given that we've had this price action today with Bitcoin, I strongly advise that you take your time and be cautious of Asia. Do not do anything unless you are trading the open of Tokyo and Hong Kong. The dead gap time, which is the time when Sydney starts, which is in 20 minutes time when the markets close, that's when the spreads start to widen and Mr. Market Maker has a free-for-all with price action. Okay, so guys, please be very cautious with that. We're coming up towards the minute mark, ladies and gentlemen. I want to thank you all. Mad love and respect. Be sure to like and subscribe because we'll be checking in tomorrow for the New York live stream, 2 p.m., where we can bring that flavor for you one more time again. Well, not even one more time. We're still going to be doing it throughout the rest of the week, but you know what the deal is. So, ladies and gentlemen, have yourselves a great evening. Trade well, think well. Mad love. Peace.